This is PayPal on the monthly chart, and it's had an amazing run since hitting this monthly buyer's level at $52 that was formed back in 2017. You had a rallying price, a basing candle, and then the rally out. If you wanted to kind of put the top and the bottom of that zone a bit more precisely, this is how it would look. Top of the zone at the top of the candle body, and the bottom of the zone, the bottom of the wick. And as predicted, two targets that I was looking at, one was at $64, which it hit. We can see that a bit better on the weekly chart. However, price has pulled back. Now, if you analyze the price action on the weekly chart, this is what I call a weekly buyer's level. However, it's not an A setup because we could not get any candle closes above $64. Now, you did get a reaction as price penetrated the zone all the way to the bottom of the zone. However, with this wick, it has filled any remaining unfilled orders. So can price go lower? Maybe. Your next level would be roughly at 55. You have this rallying price, basing candle rally out, basing candle rally, but the rally died. Now, before we look at the daily chart, let's look at the article coming from investing.com. So, Morgan Stanley, an analyst on Wall Street, they downgraded PayPal, citing delays in product evolution and progress on strategic imperatives, such as expanding Vimo and branded checkout. The key reasons supporting the downgrade move include slow progress on faster than e-commerce growth. Moreover, there is skepticism about PayPal's ability to effectively monetize Venmo as a popular checkout tool for young Gen Z Y shoppers. Finally, doubts exist regarding PayPal's capacity to make necessary investments without significant downward revisions to earnings per share, hindering meaningful business and technological improvements in the short term. However, Morgan Stanley still believes PayPal can grow revenue generally in line with the rate of overall e-commerce. And improvements in operational efficiencies along with ongoing share repurchases can support low-teen EPS growth despite pressure on gross profit margins. Based on their updated analysis and proprietary data tracking, they find that progress on key strategic imperatives have been slow, and the complexity of what needs to be done suggests progress will remain slow, with limited P&L benefits in their horizon over the next 12 months. All right, so we looked at the weekly chart. What's nice is the 13 simple weekly moving averages starting to point up. As you can see, that has served as dynamic support. Drilling down to the daily chart, you can see that level also coincides with the 200-day moving average. Typically, anything below that, you're in a secular bear market. Anything above that, you're in a secular bull market. However, at some point in the future, you will get a golden cross, and that's where the 200-day moving average crosses over and above the 50-day moving average crosses above and over the 200-day moving average. So potentially they meet sometime in the future. Maybe that happens in March, April timeframe, which will be bullish for price action. However, if you get another steep decline, 56 would be an opportunity to go long. If price doesn't move down that low, wait for price to move higher and a retest before going long. Now, we are going into a recession, and so that's going to hinder the transactions on PayPal. However, on the flip side, PayPal also trades with Bitcoin, as it is a fintech company who offers the opportunity to buy and sell cryptos as well. So let's see what happens over the coming weeks. They have earnings on February 7th, and that should be a catalyst mover. Thanks for watching. Subscribe. Please like the video.